Yo, 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 what is up? Another blessed day for Break into the Future. It's time to break in with your founder, your host, Joshua Taylor. I have the pleasure of having Crypto Mags with me today. Clap, clap, clap. We don't have the feature animation yet, but I'm so happy and so excited to be speaking with you today. How are you doing, Crypto Mags?
I'm awesome. How are you?
I'm awesome. I'm super
Let's do
cool.
this.
Super pumped to nerd out, go down the mining crypto rabbit hole, whatever you want to call it. But I guess Crypto Mags is because of your name. Is Am I right? All right, cool,
It
cool.
is, yeah, yeah.
Yeah.
Originally, I started in crypto. Now, much more focused on the Bitcoin
Okay.
and the
That-
ecosystem. And honestly, there's just so much that happens on Bitcoin, whether it's Bitcoin the network with a big B or Bitcoin the asset.
yeah.
There's mining, there's the Lightning Network, and we're seeing adoption in El Salvador on that. And
Yeah.
then there's just like the whole institutionalization of Bitcoin. So you kind of have to focus. It's tough to say if you're like, oh yeah, I'm a crypto expert. Well, really, you're not. Like, how can you be an expert in DeFi, in NFTs, in Bitcoin? There's just so much happening. So yeah, that's my focus area. That's where I see the world's headed, and it's exciting enough.
Yeah. Cool. Well, okay. That was really cool. So I would love for you to tell the people want to know who you are,
Sure.
right? And then I would love for you to pick one of those, the big B or the little b, um,
Okay.
and then like take us down your, like you said, you have to kind of specify because this isn't an asset class, it isn't in space or industry. Crypto is a new world. If we're on
Yeah.
the same page there. So who are you, and then how did you find your way into the crypto verse, and then where are you finding your niche?
Sure, sure. So I'm originally from Poland, which kind of does relate because Poland, when my parents left, was in a communist state. We became refugees. My grandma had her land seized when the Poland borders moved after World War II. So, personal history, I understand asset seizure, and she always used to talk about, how wonderful it was, and that now it's just gone. So that's just kind of like a bit of historical context and escaping, certain governments. But for myself, so I spent about a decade working in for government, but around the areas of economic development. So how do we make Canada competitive for multinational heavy industry, so steel, cement, very like energy intense, trade exposed industries. And by trade exposed, I mean, if it becomes uncompetitive, they will move, or they just won't upgrade their operation. They'll start a new operation or provide upgrades to a sister plant in, let's say, Brazil or something like that, where
Yeah.
it's cheaper to operate.
Yeah.
And so, I really focused on energy pricing, electricity markets, carbon markets as well. That is very, it's regulated in Canada. We have a carbon price that's coming down the pipe for a number of years that industry has been expecting. So it really does set the scene around, how do I compete in Canada if I'm producing a commodity?
Mhm.
And so Bitcoin's kind of a really fascinating commodity in that you cannot pass the costs onto the consumer. It doesn't matter how much, it costs for you to produce Bitcoin. You can't say, okay, now the price is this because my cost doubled, because
Yeah.
electricity price doubled. It just doesn't work that way. If it's unprofitable, you shut down. So I think the reason why I ended up right now where I am in Bitcoin mining is that I can bring to bear the knowledge that I had working with multinational heavy industries, utilizing energy, having carbon price impacts on them,
Mhm.
and seeing this ESG, environmental social governance conversation brought to the mainstream, where people are really concerned from an environmental standpoint on Bitcoin mining. I think it's a really perfect nexus for me to be where I am right now.
Yeah.
So that's kind of how I got there, kind of. But I mean, what really got me into Bitcoin was honestly number go up.
Yeah.
2017 numbers started going up, and I was like,
Stocks go
hmm,
up.
what's going on here? So I started buying in, but then it was like it's actually using it where you see the magic, where you
Yeah.
like stand in line at a bank and it's so painful, and it arrives days later. What? Yeah, it arrives days later, and it's painful, so
Yeah.
that kind of helps you see that challenge. Can we just hold on for 1 second? I
Yes.
want to.
Yeah, like you stay for, like you come for the, like you come for the trading, you come for the price, but you stay for like the technology. You stay for the use
Yeah.
how it could be useful for you.
Yeah, you stay because it's like 100 times or 1,000 times less painful than the current banking system. And
Mm-hmm.
I saw kind of the same magic when I started using Lightning last year,
Mm-hmm.
where it was like, holy crap, this is instant. And it's so cheap, like fractions of a penny, and that's why we're here, right?
Yeah. Yeah, right. Like, yeah, if I'm transferring money like over to Poland from the US or Canada, it's super expensive. It takes a long time.
Yep.
Like I could just send you some Bitcoin in like five
Yeah.
minutes.
No, I know, or less than 5 minutes. And
Yeah.
I think that's why, companies like Strike, are up on my radar and seeing what's already happening. For now, it's US and El Salvador only, but it's going to only increase. And you can use other Lightning wallets as well. But I think where it gets really interesting is when I'm sending money. So let's say again from Canada to Poland, and I just see Canadian dollars, and the person sees Polish zloty, and you don't see the use of the Bitcoin network in between to transmit that value. I think that's pretty cool.
Yeah. Wow. So you actually see um, central bank digital currencies, that's CBDC. You see these central banks are, you don't see them being able to
No, I'm
be.
talking about using the Bitcoin network, not central bank digital currencies.
Okay. Okay.
I
So
mean,
okay, I'm trying to understand. Okay. So basically are you using the nation's currency it through Lightning Network? And then what is Lightning Network? If you
oh,
could.
okay, let's backtrack. Okay, so there's
Yeah.
the main Bitcoin blockchain,
Yeah.
which is every 10 minutes, there's a new block mined on average every 10 minutes. And the new block will include all the transactions of people bidding to say, hey, I want to transmit a certain amount of Bitcoin. Here's a transaction. I'm willing to pay, I don't know, let's say like $5. Somebody else is willing to pay $20 because maybe they want to move a big amount of money. Someone else is willing to pay maybe 10 cents,
Mhm.
right? So the miners choose. They're like, hey, I want to get paid. So I'm going to pick like the most money, and I'm going to put all those transactions into a block. And then that block has a history that's changed to the previous block and vice versa. So you can always, you know, see where you sit relative, to the time that you did the transaction. You can see publicly, the transactions that were made. But the important part there is, you're on the main chain. It's transparent. And the Lightning Network, though, is a network that sits on top of that, where it every now and then connects back to the main chain. But there, you can have hundreds of thousands of transactions, millions of transactions happening off the main chain that are instantaneous. Kind of think about it as like a highway versus like this network of roads that people are taking, and every now and then coming back to the highway. So you can have so many more cars off the highway, especially if it's congested, and every now and then connecting back.
Yeah.
And that's how you pay for coffee. That's where it costs, fractions of a penny, because you're not using the main Bitcoin blockchain. And we've seen, that one become congested. For example, when price starts to run up quite a lot, there's a lot of use on it. Bitcoin transactions have been like $10,
Yeah.
$20, and then you see the criticisms of, oh, this is useless. Well, it's not, because it's not. You don't have to wait 10 minutes. You don't have to pay $20. You just use this scaling layer where me and you can just like, it's kind of like set up a bar tab where I just keep, like buying things off of you. And then at the end of the day, we're like, let's settle at the end of the month. And we had maybe 100 different transactions throughout there. And that's what connects to the main chain.
Yeah.
So I think that's kind of where, this magic will come in. So some people see Bitcoin as a store of value, and it's to protect themselves against inflation, but others are starting to utilize it just as a general currency would. And so when you mention CBDCs, like, you don't have to bring CBDCs into this, because I can use Canadian dollars that gets instantly converted using any kind of crypto exchange, where it's most optimal in terms of the FX price.
Mhm.
And then, so it gets converted into Bitcoin, sent along the Lightning Network. So it's cheap and fast, and then converted one more time at another exchange to another currency. So it looked like I converted, from this dollar amount to another dollar amount, but it was cheap. It was fast. And you can either receive it in Bitcoin on the Lightning Network
Yeah.
or just in another currency. And I think that's something that's becoming a lot bigger this year, especially after the El Salvador announcement. And the
Yeah.
community is just working really hard to build out the infrastructure because we want to see it work, right? Like we're here because, at the end of the day, we want to support countries like El Salvador, where 20% of their GDP is remittances, as in sending money home, like working abroad and sending money home. And a big chunk of that gets taken out by, like Western Union and other remittance companies.
Yeah.
Yeah. And we want to see people, having bank accounts. And it doesn't have to be like a bank account these days is not the traditional bank account. I show up, to a bank and I request for it to be made. It costs about, I've heard, about $100 per year. All the regulatory requirements. So, know your customer rules, anti-money laundering, anti-terrorism financing rules. It costs quite a lot of money to have those checks and balances by banks. So they're not going to set up a bank account with $20, right? That's why in Africa, a lot of people use their mobile phones and they have mobile credits that they then exchange instead of currency, right? So that's become kind of a de facto currency. Well, I think that's what Lightning will enable, where people can just have Bitcoin wallets on their phones, and it's going to become very, very simple. So, but yeah, we went down the Lightning rabbit hole a little bit.
We did. That was awesome. Thank you. So if you want to nerd out again, definitely do that. So with that, you're basically saying that I have two questions. So you're
Sure,
basically
go
saying
for it.
that, and to confirm this, and if you want to go more into it, you're basically saying that Bitcoin is the standard. We know that's a book, the Bitcoin. I have it in my room. With the Bitcoin standard is basically saying that Bitcoin is the new reserve currency, essentially. Like it's the new. It's not a intermediary, but it's
Yeah.
new exchange rate. What the dollar is today, right? That's a fiat currency, meaning that it's printed out of existence of, hey, whatever we need, we could print more, right? Which dilutes the value. Bitcoin is a fixed supply, right? So there's only so much that can be created. So it has
Yeah.
true value. So you're basically saying any currency that we want to interexchange throughout the world, we could do. And does that involve other cryptos as well?
So, yeah, so I'm going to kind of separate that into two things. Again, Bitcoin as the network versus Bitcoin as the asset. So some people think that Bitcoin can become the reserve currency of the world. You know, 21 million will only ever be created. There's a lot of transparency around when it's issued, who owns the Bitcoin in terms of pseudonymous addresses. But that's one thing. So I think, some people think that we're moving to a Bitcoin standard, but that's still quite a bit of way away. But as Bitcoin, the network, in terms of enabling a new financial system, so it's kind of exchanging the plumbing that we have of the current system, whether, you look at the US dollar, everything that comes into it, there's Fedwire, there's all the, like whether there's, MasterCard and Visa processing and how everything is interconnected and people have accounts and how the banking system kind of connects to all that. So we're replacing that with a different network that is decentralized, that hundreds or thousands of people are working on, whether that's Bitcoin Core developers, to make sure that the right types of changes are made and they're slow. So we don't cause any kind of problems down the road, that they're interoperable with previous versions. So that network that leverages the skill set of thousands of people is the one that we're building on. So it's just, remember, I don't know how much you're aware of like the internet history. So way, way, way back when, we had a more, decentralized internet that nobody owned versus, public companies were forming their own, just like CBDCs, countries are creating their own central bank digital currencies, and that's kind of their own ecosystem.
Yeah.
There was also this open network that people started building on. And that's what we're doing, right? We're recreating the financial system in a different way. And that could be on Bitcoin, and that could be to transmit money, not necessarily like the store of value. Let's put that aside, but but it's the actual network. So,
Yeah.
I can plug into it and transmit money, for example, on the Lightning Network super cheaply. And I think that's the powerful part
Yeah.
where it's open source code. And, historically, we've seen open source code wins against, these private networks.
Yeah. So you're basically saying because the internet was created as an open source, right? We only really had physical connection to people, right? If I would never be able to know crypto mags in another world, but now
Yeah.
because of the internet is literally I can connect to anybody, Canada, China,
Yeah.
anywhere. And now, like back then, it was way harder, but it's an open space, right, where we could connect. Now we can do that easier. We were able to develop a new money that's
Yeah.
programmed, right? And we're able to do that in a more cost-effective way. And that just
Yeah.
happens to be Bitcoin, which is built now. We're focused on blockchain mechanisms to make that happen easier, not just for us in the first world, but also the emerging economies like El
Yeah.
Salvador, Africa, Southeast Asia, and the like. Is
Yeah.
that
Yeah, no, that makes sense. And the cool thing is, it's just like Africa kind of leapfrogged landlines, right? And they went to mobile phones.
yeah,
Some of these countries where, El Salvador is a great example, 70% of their population is unbanked, as in they don't have access to a bank
crazy.
account at all. Like they're going to leapfrog banks. They're
Yeah,
going to be using the Bitcoin network because of the Bitcoin law that was proposed. But the cool thing there is you don't have to, like, if you don't want to use Bitcoin like as your unit of account and you want to store USD on your wallet, the country is plugging in so that people have a choice. Sure,
mm,
they can use the Bitcoin network to get paid, but then it can be instantly converted to USD
mhm,
equivalents
mhm.
on their phones.
Yeah,
But the whole point was that the rails by which and the plumbing is actually on the Bitcoin network and not the legacy banking system, because even their banks aren't connected. So if you want to move money from bank A to bank B, you have to actually walk across the street with your money. There isn't a connection point. So this is pretty cool and pretty fundamental change. And I do think that over time we'll start to see it roll out in other countries. This is kind of, I don't know if experiment's the right word, but in a way it is an experiment, right? But on a large scale, on a country scale. And once you see, people are working hard to make sure that it works.
yeah,
And there'll be a lot of eyes, on it.
yeah. It's exciting. Like I love the leapfrog analogy because you kind of saw how China, they're a whole different beast, but they did it as well in terms of just their whole economic makeup, going from more of like a pseudo capitalist communist from just straight communism, and then Africa, right, like was like nothing, and now it's like, man, watch out in 10 years because they are going to leapfrog the PC era. And then from a banking perspective, this is my next question. So
Yeah.
so you're talking about these rails, right? What are these payment rails you're talking about? And who are the old payment rails,
Yeah.
and is Bitcoin taking over these? Does that mean the old rails are gone, like they go away?
I think we're going to still live in a system where you have both for a long time. It takes, especially in more developed economies where everything's kind of connected and plugged in.
Mhm.
But for those countries where, again, there isn't that infrastructure, when you have a large percentage of the population is unbanked, underbanked, that's going to take place. But even in America, if you look, there's about over 20% of the US population that's either unbanked or underbanked. And underbanked means they can't get access to credit, for example. And some folks, they're using things like Cash App or Venmo or Square uh, as replacement for bank accounts. They're sending money that way to other people, right? Some of these businesses have integrated that you can now. So Square, so you can actually have almost like a bank account equivalent.
Yeah.
And so you don't have to go to the traditional Wells Fargo or whoever, all the banks in the US are. So for those people, in some ways they're lifelines, but in other ways they're actually getting access or more equitable access to financial services. So, and the neat thing about Bitcoin is it's a bearer asset. So if I send you Bitcoin, like that is final. There is no take back seas. There's no calling up and saying, oh, I didn't get what I delivered, but you're maybe lying. And can you, reverse this transaction? And in the legacy banking system, if you buy something on a credit card or a debit card, for months and sometimes years, you can actually reverse that transaction. So there's a lot of uncertainty there. So, companies like MasterCard or Visa, they add, there's a reason why there's high interest rates. And part of that is, the chargebacks area. And so because when you do away with kind of this uncertainty and having a final settlement, that improves the better the cost, improves costs.
Mhm.
But that said, I think we all have to get used to the idea of as it was centuries ago, you carried around money in a money purse. You were your own bank, right? You hid it in your house, in your safe, or on yourself. And it's the same thing. I think we've gotten so used to people or intermediaries, other companies,
For us.
storing things for us, whether that's banks, whether that's storing information, everything's moving to the cloud. So it's just, we become it's so easy to do it, right? And this is there's a bit of a learning curve, because the onus is on you. If you do not do your security right, you can lose it, because again, the blockchain is forever. If you send money to the wrong address, or you're not, you download some virus because you don't have the right kind of procedures in place, and they take your private keys, they can take your Bitcoin. So we're moving back to the system of no, I'm a sovereign individual. I own my data, I own my money, and I have to make sure that, I'm not all willy-nilly about it.
Yeah, convenience isn't always great.
Yeah.
We're saying, how do you, I know, I guess from a mining perspective, if someone was new to this, and to this show, or just new into crypto, what is mining and Bitcoin mining? Am I mining out of the ground? What does that mean?
No, it's similar but different from kind of traditional commodities. So I actually find mining fascinating, because it's the only industry I can think of where you have a industrial footprint, as in I build a big facility, it has an industrial, base. I'm using electricity or other resources like natural gas that I'm combusting to produce power. But the good that I'm producing is a digital good. It's truly digital. That's it, right? It's not a physical product that I can sell. It's something that lives in the virtual world. And I think that's pretty cool, because it involves, it's this nexus of the two, of the old analog world and the new digital world, this whole knowledge economy, digital economy. So I think that on its own is pretty special.
Yeah.
So Bitcoin miners, they provide an important service to the network, the Bitcoin network, the big B. They make sure that transactions are added into the blocks. So we have this, continuous history of transactions occurring. They also provide security to the network. So if you think about the billions of dollars that have been invested into Bitcoin mining infrastructure, whether that's facilities, whether that's the actual computers that perform the calculations to help them find the next block, there's a certain level of effort and physical expense that went into building this infrastructure. So you can't have someone that, is a super rich country, let's say. People always used to say, oh, what if China takes over the network? That's not going to happen now, but that was always a fear, no matter how much remote it was. And so the reason that you can't, it provides so much security is because that means that a country or a bad actor, or someone let's say, ultra, trillionaire or something like that down the road, could amass enough wealth and enough equipment and facilities to attack the network. And that's, the bigger that Bitcoin gets, the bigger the hashing power, as in the number of computers thrown at the industry, the harder it is for any one individual, any one country to take over the entire network. And so, that's why it's very secure, is because you just can't.
Decentralization.
Yeah, and so that's why it's, kind of important compared to something like, let's say, proof of stake, like Ethereum.
Yeah.
So in Ethereum, once it moves to a proof of stake network, currently it's still mining. It will, people will stake their Ethereum. So I have a certain amount, and maybe I get a certain amount of votes, right? And so it's one of those systems which is kind of similar in some ways, where if you are really rich and you buy a lot of it, maybe you can help influence that system. And it's different in the Bitcoin network, because even if you amassed a huge ton of equipment, you don't actually, it's not the miners that vote on network changes. It's anybody that runs a node, and connects to the network and watches what's happening. And so you, me, anybody who has a computer can set up a Bitcoin node, or just like a little Raspberry Pi, and it's not very expensive. And so in the past, there have been almost like, well, it was a war where some people thought, hey, look at the networks running pretty slow. We can't, like, during the so when it was sorry so the network, like, let's say, is running really slow. We're worried about scalability. Let's make the blocks bigger, like, as in, let's put more transactions into a block. And so there was really a fight about that, of how many
Blocker.
people sorry, like, yeah, so the miners, maybe would have preferred that, some of them, but people like you, me, we were running nodes, and they voted against it, because the bigger the block, the more like infrastructure you need yourself to store all the data, and then it becomes really expensive. So for example, for Ethereum, you're going to need 32 Ethereum you have to stake them enough to run kind of the equivalent of a node in Bitcoin, and that's a lot of money, right? And so it's a lot harder for someone to get into that.
Mhm.
It's a big investment, and so it makes it a lot more equal and accessible. Is if I want to have a vote myself, I just have to run a computer, download the Bitcoin blockchain, and I don't even have to download the entire history. If I don't have a lot of storage, I
Yeah.
can do something, it's called a pruned node, where I just have like a certain number of last blocks, but I still know that, like, this is accurate picture of the last, you can decide, however many, maybe let's say the last year, but I still have a history of what happened. So I'm pretty confident that I understand what's happening on the network.
Mhm.
And so, yeah, so anyone can do that.
Yeah. So anyone could, if just with a computer and
Yeah,
the Wi-Fi connection, could get on
exactly.
and
Exactly.
mine. Uh,
Yeah.
let's dig into that. Crypto Mags. I love your name. Crypto- uh, what? So like, I know there's like companies that are focused on that, like bringing crypto mining to the masses, and we could talk about
Yeah.
the landscape. Like, you have these big like mining pools, like F2 pool, which is like they were huge in China, and
Yeah.
get into that, or like, you have compass mining, or you have
Yep.
yellow honey miner, and like they're like for, I don't know how big they are, but I've heard of them and I like
Yeah.
to use them. They're
Yeah.
like, they want like regular people like me to use it. Can you
Yeah.
break down
Sure.
the mining
Happy to chat
industry?
about that. So let
Yeah.
me backtrack a little bit. So mining pools, what are mining pools? So way back when Bitcoin first started, anybody could mine Bitcoin on a regular computer. So I had my laptop. I didn't back then, unfortunately. So sad. But anyone who had a
Right.
computer and decided, I know, right, that they wanted to mine, they could. So you could mine on a computer, because the network difficulty was low enough that you didn't need specialized equipment. But Bitcoin is kind of an elegant system where the mining difficulty adjusts. So how hard it is to find a block changes depending on how many miners participate in the network. So we've grown, like, thousands of times more computing power has been thrown at the network now. So it's become difficult enough that you need to throw very specialized machines, they're called ASICs, at the problem. And that, you can't mine on a GPU anymore, and maybe you need a bigger facility if you want to own a big percent of the network. And so in some ways it's gotten harder, but also not so, and I'll get to that for like companies like ASICs. But let's backtrack. So around 2013, what happened was enough people started participating in the network that it wasn't like back in the day, you could easily mine a block and get your like 50 Bitcoin or 25 Bitcoin, however many the block reward was. But then once more and more people joined, it became kind of like, I don't know when I'm going to get the block because there's so many people participating. And so maybe I'm going weeks or months without finding a block and getting a Bitcoin reward, but I'm spending electricity, mining this whole time. And
Uh,
so what people did was they joined pools. So let's say, 100 of us grouped together and we all mine together. We put our computing power together. And depending on how much percent of this computing power I am as part of this 100 people, maybe I have a lot of machines, so I'm 10%. When we mine a block, I would get 10% of the payout. So the mining pools became a way to have a more predictable revenue stream. So maybe there's one pool that's 8% of the network. And so every now and then, any blocks that are mined, it gets spread across those that contribute to the pool. So that's kind of the situation that it is today. So it's not necessarily, like it doesn't represent like certain companies in terms of miners. It's just people that decide to, for whatever reason, maybe join the US Foundry pool because they're like, yay, America. Or maybe they want to join somebody like Slush Pool. Maybe one of them has a better chance of hitting blocks historically. So they're like, hey, they're doing something right. They have like software that's maybe making it a little bit more optimized.
yeah.
So people join a pool. Now, when it comes to, we're in this age of industrial mining, setting up big sites. But actually I'll get to that because there's different mining models. So it's not everyone's doing this like large scale industrial site, which is kind of cool on its own, that not everyone is doing that kind of business model. But there are companies like Compass where they're making it a lot easier for anybody to mine. So I can buy one ASIC miner, and they have found hosting partners. So people that create a facility that build up the infrastructure, and you can plug that miner in there probably cheaper than you can at home. So for example, in Canada, my electricity rate changes between 13 to like, I don't know, 19 cents Canadian per kilowatt hour. Very expensive as a residential person. Industrial rates are much lower. But the point is that they find sites that are maybe 6 cents or 7 cents Canadian. And you can ship your miner, and they will buy a miner and ship it there and mine for a year. So you're getting a cheaper rate, maybe half of what I would get on my household. And I can buy a miner there and they take care of all of it. So, obviously you pay them a service, but it's a lot easier for someone. And that's more of a retail, I want to buy one, I want to buy 10 machines. And I can get into this myself a lot more cheaper because so for example, during the last bull market run up, a lot of there's FOMO, fear of missing out. It's not only just buying crypto, right? As it's going up, people were FOMOing into mining. They were just setting up facilities and like, oh yeah, sure, it's profitable now because they're mining at like really expensive electricity rates. Well, when there's a downturn, you're not going to be able to compete compared to yeah, exactly. Let's say you got a facility and you're mining at like 10 cents. You're like, this is great. Bitcoin's 20,000 and making money. Well, when the price fell, those miners that were mining at like 3 cents or 2 cents, for example, in China and some parts of Texas, US, they're doing way better and they didn't have to shut down, unlike your operation because your cost of power was like 10 cents or 15 cents. So there were companies that went bankrupt because and not only that, mining machines go up in value like a ton. So just to show an example just from this year, you could buy an S19, which is one of the newer Bitmain miners, in December for around 2,500 US. Then it went up to like 12,500 US around March, April.
Why?
Because it got so profitable to mine. And now they're back to anywhere from like 5 to 8,000, depending on who you buy from. But the point is, the reason the price changed so much was when the price was lower, it's less profitable to mine at certain electricity prices. But as the price goes up, your margin can be as high as 90%. And that's unheard of in a lot of industries. Like everything is kind of profit beyond there. So especially if you have cheap power. And so you want to throw as many machines as you can at the problem. And like during the market downturn where Bitcoin went to like dipped into 4,000 US territory, right? people were selling S19s. Those are several models behind the current S9s, several models behind the S19.
Yeah.
People were selling them like $20 per, like by weight. Or something, like they were super cheap. And then when the Bitcoin, when the price ran up to like 60,000, you could buy the miners for like $500 or $600, because it was still profitable to mine. It was
Yeah.
so profitable. And right now too, because China put in some regulations
Mhm.
around May, which basically banned mining all across China. They went province by province, but now it's effectively banned. So China accounted for about 50% of our industry, which is actually insane. So like there's no other case that I can think of where 50% of an industry has to like relocate around the world.
Yeah.
Like
That's a
it's
real great
shocking.
migration. That's
It's
crazy.
a huge migration. Yeah. And so with that happening, that's just like 50% of miners got taken offline. So the network adjusted, as in it was like a certain difficulty level to make sure that we meet every 10 minutes, we mine a block. But when it got cut in half, the difficulty was still pretty high. It takes 2 weeks to adjust. So it was taking maybe like 15 minutes for a block or approaching maybe 20 minutes because, you cut it by half. So then the difficulty had to adjust to make it back to kind of like every 10 minutes. And
Yeah.
so if you're a miner, it became pretty close to being as profitable as when Bitcoin was like 50, 60,000, because so many machines got taken off and like nothing really changed for you, just like the difficulty adjusted. So right now it's a great time to be a miner, and even the S9s, which are really old machines. And I'm running one of them at my house on residential, like residential rates, so they're not cheap, but like I'm at least covering the electricity price, and it's just kind of cool to participate just on my own.
Yeah. So when you're mining on your own, for all the individuals out there that don't have that aren't in pools yet, when you're mining and you're paying that cost and your gains, your revenue, what are you collecting, right? What are you
Yeah.
connecting with your machine?
Yeah, so usually you have to kind of do a calculation where, so I'm going to spend some capital to buy equipment. And that capital, I hope to, before you start to make a profit, you have to pay back that capital. So if my machine costs $200, or I have to first make $200 equivalent with the machine before it makes sense. And then there's also the electricity cost. So I'm paying all the time as it's turned on, it's using a lot of power. And so there's the electricity cost that I have to cover too. So over time, so people try to aim for, about a year payback period. So within a year, I'll pay off the capital equipment. And then anything after that is bonus Bitcoin. So when you're mining, obviously you want a lower price of electricity and also machines. You don't want to be buying kind of near the top where the machine was like double or triple what it
Yeah.
would have been when it wasn't. So like right now is a much better time to buy equipment because the prices just dropped, because there's just this glut coming out from China.
Mhm.
But at the end of the day, you have to kind of, hope that you can pay it back enough that you end up with more Bitcoin than if you had just, so like, let's say it was $200, like one of the old machines. So let's say I buy this piece of equipment. Instead, if I had put $200 into Bitcoin, like ultimately, and converted it to some, to 200, and when Bitcoin price goes up, to like, so we bought in, let's say at 30,000. So at 60,000, the price of Bitcoin, like it's now at 400. So it's just, you want to make sure that like whatever amount of whatever Bitcoin that you bought, over time is more because I'm mining. It's like you have a money printer in
Yeah.
your bedroom. Okay, maybe not the bedroom because the machines require a certain voltage, but maybe in your garage, right?
Yeah.
Or where you plug in your dryer
Mhm.
or your washing machine. And so the reason why people mine is if the electricity is inexpensive enough, they hope to end up with more Bitcoin that they would have had if they just put that money in. And there's some great calculators out there that you can use. For example, Slush Pool, which is a mining pool. You can put in different factors like, uh, how, what kind of machine I have, what's my price of power, and you can kind of do that calculation. At which point I break even and start to make more Bitcoin than. So you can kind of help you model that, but
Yeah.
it's kind of cool too because if you think of it, it's more understandable for like I think companies because it's like, oh, okay, I'm making a capital investment, so equipment, and I'm getting a return, kind of like, profit back, right? So I can depreciate my equipment. So if I like start my own business, you know, business of MAGS mining,
Yeah,
I
that's
have
awesome.
expenses, right? So I have expenses, which is electricity, the hardware that I then depreciate, and you can offset those against, the Bitcoin that you bought, and then maybe choose to sell. So there is, in a way, from like a tax situation, it could be seen as beneficial. Again, not an accountant, but some people like to do that, and they like to depreciate. And I've heard of like pleb miners, as in like Joe, you, me, whoever, that are mining, on their own and setting up just like, just kind of like self-employed or whatever you want to set up your business
Yeah.
and then expense that. So it's pretty cool. It's a totally different way, right?
Another way to make money, right? But
Exactly.
also you could say learn about that part of the crypto world because
Yeah.
it's such an integral part. Um, I guess will there always be minors? I guess
Yeah.
in terms of like, so for people that don't know, and you know this better than me, right? The there's 10 minutes, every 10 minutes more Bitcoin is mined from
Yep.
each block that is created,
Yep.
right? And that we keep on having every 4 years. Can we
Yep.
go into like the time in the halving cycle?
Sure.
Like the
Yep.
when will the 21 million be finished? I know that, but
Yeah.
you're the
Yeah.
expert.
So when Bitcoin first started, every block had a reward of 50 Bitcoin. And then every 4 years, that supply is cut in half. So right now, so it was 50, then 25, then 12.5, then 6.25 is where we're at right now.
Mhm.
And in, I want to say like 3-ish years, um, it's going to get cut in half again to 3.125.
Mhm.
And so on the one hand, you're earning a block. Sorry, you're earning, it's called a Coinbase reward, the actual amount of Bitcoin that you mine as a miner, but you're also receiving the transaction fees that people, they're bidding. They're saying, hey, please include my transaction in this block because I'm a billionaire and I just sent $100 million to my hedge fund. I don't
Yeah.
know, whatever. And you're like, I want to make sure I'm included. And so you take this fee and you add it to your reward for mining this block. So right now it's about 9% that the transaction fees make up of the entire kind of reward that you get for mining a block. But
Mhm.
over time, as the reward goes down with each halving, we anticipate that the transaction fees will form a bigger percentage, like a bigger chunk of that. So it's not like so 2140, sorry, yeah,
141.
sorry, 20, yeah,
I think it's 20,
um,
2041. 2041.
2041. Yes, sorry. So
21 is like, whoa.
no, 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 no. So in like after a few decades, when the last, there's no more Bitcoin rewards, there still will be transactions that miners will get paid to make sure that they include in the block. So it's not like mining will stop. The miners would just perform a different service.
Mhm.
And yeah, so it's not the end of the world.
Yeah. So the fee part, I guess were people, is this people and like institute, like big well, we call it whales, like people with a lot of money and are are these all institutions requesting to have their transactions on the block, or is it like everybody that's on the network at the time?
It's anybody that wants to participate. Like, so it'll be interesting. So let's say Bitcoin goes up to 1 million, right? So the transactions might end up being, they might cost $100, they might cost $2,000, depending on how many people want to have a Bitcoin trend. Like, let's say Bitcoin really takes off, right?
Mhm.
And a lot of people, have it as a store of value and they're transmitting it. So the base layer was never kind of intended to be used for things like coffee and payments.
Mhm.
It's more of like a final settlement network. And that's something that it's kind of similar to the US Fedwire system where the final banking settlements are done at the end of the day, and it's like large amounts only.
Mhm.
But so probably be, like larger amounts, people that really need to see it move. And so if you're paying a huge amount of money, it would probably make sense that it's a large amount, but there will be scaling solutions on. There's other things being built out as well. There's Liquid, which is being used, created by Blockstream, and exchanges are using that to send Bitcoin around. So there's more kind of the smaller transactions that every now and then get reconciled on the big blockchain. So it's still going to be happening. It's just probably for the larger transactions at that point in time.
Yeah. Okay. Nice. And with the fees, will like say there gets a lot of hype or just will the fees be so high that it's like kind of like Ethereum? We'll get into that. Like the
Yeah.
gas fees or the fees just like, oh, it's too expensive to transact. Like, isn't it supposed to be cheap? Isn't this the whole
Yeah. So
solution meant
like,
for?
yes. So probably around 2140, the fees will be a lot higher. And no, it is 2140, not 2040.
Yeah,
So,
yeah.
but it's going to be so small. Like the block reward up until 2140 is like, because it's like this big curve, like 50, cut in half, right?
Yeah.
And so at that point, yeah, no, I would expect, I mean, if Bitcoin is successful, I would expect each Bitcoin to be worth significant amounts of money. Again, depends on what we're replacing, right? Are we just replacing gold, which is about a $10 trillion asset? Are
Yeah.
we replacing the financial banking industry? Scarce assets like art, they're trillions of dollars worth. So, what are people storing their value in, right? Or what are people moving value across? And so, if it becomes a multi-trillion dollar asset, then certainly, you would think that transactions are going to be costly. And again, if we're buying coffee or whatever using Bitcoin, it will be on the Lightning Network, and that can scale to millions of transactions per second.
Yeah.
And again, so there's no problem, and that still will probably be very cheap, and probably cheaper actually, because if you look at Visa, it's like 3%. The merchant, somebody pays about
Huge.
3% for Visa in a fee to use the system. Usually the merchant just sucks it up and you don't see that. But Bitcoin, we're fractions of that
Mhm.
right now, like to use the Lightning Network. So it's not like, it's cheaper, period.
Yeah. Yeah. And that's the whole reason Bitcoin was created, was to
Yeah,
reduce.
originally it was an electronic peer-to-peer cash system.
Yeah. Getting
But
back
we
to
kind of, like, I think the scarcity story took hold, the digital cash story.
Mhm.
And then especially last year, it was the hedge against inflation, right? There's a fixed amount of money, sorry, a fixed amount of Bitcoin out there.
Mhm.
And it's a hedge against inflation because in a world where 40% more dollars was printed since last year,
Mhm.
you want to store value in something that's not growing in supply.
Yeah. Yeah. So let's hop on that rail of scarcity being first to the crypto world, and people like Michael Saylor are people from the OGs of crypto, that are huge proponents of this new world. They're the early innovators, the legends, right? The top 100, and they're trying to tell the world to hop on this, but they have accumulated massive amounts of wealth on a freedom story. How are they gonna? What do you think about that? Like in terms of the Bitcoin store of value versus like, okay, we're really promoting freedom and like peer to peer. How do you convince
Yeah.
people that they're really not just the old system?
Yeah, so I think the difference there is if I own a lot of Bitcoin, I can't vote to make changes to the system myself, unlike, traditionally and
Mhm.
the or something like proof of stake system. So there's a bit of that divergence. But the second important part is Bitcoin is divisible, right? To Satoshi. Satoshi is the smallest unit of Bitcoin. And so just because it becomes more popular and worth more doesn't mean that somebody can't still transact on a day-to-day basis, and maybe it is just converting it back still to like a USD value. Like you can still use that payment rail, or you can have fractions of a Bitcoin, unlike, like pennies only go to two digits, right? but you can have a lot more fractions of it. So I think again, they're not those people that own and amass Bitcoin, they're not controlling it
Yeah.
in the same way as kind of the legacy system. And honestly, I think it doesn't even matter what kind of asset there is out there. There will always be people that will amass resources, whether that's land, whether that's gold, whether that's currency, real estate. So it's
Data.
you know I think it's something you really can't get away, because once you realize that I have to protect myself and my wealth in some way, they will. But the key part is, even if they do, they cannot control the actual protocol, because it is decentralized, because it's open source. The
Mhm.
community, anyone like a pleb like you, me, can vote on it.
Mhm.
So I think that's kind of what makes it different.
Yeah, that makes sense. What if like a big well, like people just start dumping Bitcoin? What does that do?
I mean, I think we've seen there's a funny story, or funny I don't know if it's a story, but it was called the bear whale.
Mhm.
During a previous downturn, there was a giant whale that was just dumping tons and tons of Bitcoin, trying to bring down the price.
Mhm.
But it was like, so it was called a bear because it was like dumping, right?
Yeah,
And but like people just were buying it up.
yeah,
I think it gets harder these days because it's Bitcoin's grown so much compared to when the bear whale story happened. Like the asset class, we hit $1 trillion. I think we're still below that right now. We're kind of hovering around it. But the point is, the bigger the asset class gets, the harder it is for one individual to dump a lot of Bitcoin. Like, yes, it still happens. Someone, like every now and then we see something happening, but over time, people are accumulating it, like large institutions. They're looking for kind of like good entry points, because there is fundamentally good value. And just looking at what happened, even like over the last year, the amount of like legacy Wall Street macro investors that jumped in, all the banks are, like they're setting up crypto trading shops, the ones that used to like poo poo Bitcoin, right?
oh, God.
You have countries adopting Bitcoin. You have China banning it, which for the longest time, China fears of like centralization and all sorts of, different things. People were, or like just China bans it again and the price would tank. So just having that out of the picture makes it so much better,
Yeah,
from a certainty perspective. And we have companies like NYDIG coming in and linking into legacy banks, so
mhm.
that was like, I don't have to set up a whole account on Gemini or Coinbase or Kraken or wherever. I can just buy Bitcoin at my bank because they're enabling any bank or credit union to
Yeah.
plug in.
Mhm.
Like there's just so much more choice this year
Yeah.
for buying Bitcoin and owning Bitcoin and storing Bitcoin,
Mhm.
that I think it's just the world's kind of shifted.
Yeah, there definitely was I don't know if we call it a shot, but something erupted. When,
Yeah. Oh, and companies, I forgot, like companies are storing it on their treasury, SpaceX, Tesla, Square, MicroStrategy.
yeah, they have a
Like
lot.
that was until last year, like no companies held Bitcoin on their reserves, and now and it's quite probable that others are buying it up right now, right? Because it's a good price.
Yeah,
Like, and just even looking at the metrics, like the number of addresses that are going up, the number of Bitcoin on the Lightning Network.
yeah,
So maybe, recently the number of addresses on the main chain have slowed down, but on the Lightning Network, it's growing. So our system is growing, and price tends to kind of follow that. Just think of like network effects, right?
yeah.
Think of Facebook over time. Like we're gaining a lot of users.
Yeah, that's a great way to put it in terms of it's not really a company, it's a protocol. But in terms of user adoption, just like the internet was in the mid to late '90s, which I wish I was old enough. But this is my time to shine. So
This is your time.
yeah,
I missed the 90s as well, the .com. So we're here and we're building on Bitcoin.
this is our
And yes,
time.
there's other currencies, but like I said, I tend to focus. There's enough happening here.
Yes,
But
for
we're
sure.
there. We're early. We're so
Yes,
early and we're helping
yes,
build it.
yes, it's early. I wanted to stay on the scarcity part in terms of
Sure.
not the mining and crypto. We could literally go in a whole different section of that. Like we said, it's a universe. it's a metaverse of metaverses, but the scarcity of inclusion in our space. So women,
Yeah.
um, African, Pan African, African, all African people,
Yeah.
Latin X people, just people who are, usually not in emerging technology. You've been in the space for a while. You're kind of an OG. Like, explain your experiences with that and where we need to go into the future since we are breaking into the future.
Yeah, yeah. So when I first started kind of joining the crypto ecosystem in 2017, I mean, it was very apparent. Like there's tons of men in it. You go to a conference, it's like 90% men. I remember one conference, it was like a investment kind of institutional one where I didn't even realize there were no women panelists. I think there were like 20 or 30 people that spoke. And
Yeah,
until after it was over, I was like, wait a minute, there were no women on that panel. And that was just standard, right?
yeah,
So I think the industry's come a long way, especially seeing things like NFTs and the creative kind of ecosystem come in where you have a lot more artists. We're seeing things like decentralized finance and just more and more people joining. There's more space kind of at the table.
mhm,
And even in the Bitcoin space, like there's a lot of smart women, leading companies, a
mhm.
lot of people for folks to look up to. But I think it's been traditionally challenging. So when I worked in economic development, this is not new for the tech sector
Yeah,
and for funding. So whether that's women, whether that's people of color, or any kind of marginalized community, that's always been a challenge to gain access,
mhm,
whether that's to funding or the number of founders out there.
mhm.
I think the industry has improved a lot. But and I think there's a lot more resources. There's recently a DAO that was set up to, I think it's like Karami. I don't follow DAOs as much, but anyways, the point is that they're there to fund, to identify projects and founders, people of color, women, all sorts of folks to kind of boost them up. And there's initiatives like SheFi or like She 256 that are all about finding and supporting these people. And I think that's kind of the right step forward. But it's challenging because even we're integrating kind of with the legacy finance world, and that was traditionally dominated by men. Like how many women CEOs are there, right? Like how many women are leading hedge funds? It's pretty low, right? And
Not
yeah, yeah. So I think best what we can do is just boost the women up in our life, boost the people of color, and things like Bitcoin and Black America and those types of initiatives where you're there and you're educating and telling a story that kind of fits that group really helps kind of hit the story home, because from my experience, probably can't tell the same type of story as someone like yourself.
yeah,
And I have different experiences. Latin American community, I think Bitcoin is exploding just because of what we're seeing in El Salvador, right?
yeah,
And what we need is like more educational content that's kind of like content specific, like
mhm,
context specific, right?
yeah,
Yeah, so kind of explaining those types of challenges, and like stories are just so powerful. But I think too, like just on our own, like I said, boost up those people, like retweet, like make introductions, like, hey, this person's really working hard. I think this is an amazing product.
yeah,
Just be conscious of that. I think that can be a big help. And I think it's just something that it's really hard because the system was set up for so long in a certain way that was not as inclusive.
mhm,
And I think it will take some time, but like I said, we're starting to see a lot more initiatives that are there to battle that,
mhm.
which is just awesome.
Yeah, that's cool. If I am a woman, a man, or someone of color, or just I'm just new to the space, or hey, maybe I'm an OG in the space and I'm a male or whatever.
Mentor people. Yeah.
Yeah, like hey, yeah, mentor people. But how if I'm a newbie or just
Yeah.
marginalized person, how can I start? Where should I go to start my journey in crypto?
Are you just starting like a learning journey, or are you starting
I would say if I want to learn more about mining, where should I go? Or if I just want to start, if you want to start with crypto, just go to Break into the Future or Breaking Crypto.
Yeah. So I think it depends. Like, I mean, there's a lot of great resources that are coming on. I personally love podcasts, right? And for me, if I'm trying to keep up on like the mining stuff, I just Google it, and there's some content. For example, Compass does like mining specific podcasts, but there's like so many podcasts that are like NFTs and DeFi, if that's your thing, or very specific to Bitcoin. So I think like that's a great place to start learning. But if you're looking for more, something that's more to your particular community, like reach out to more specific resources, whether that's, Twitter Spaces or Clubhouse that are geared towards, for example, Black entrepreneurs. So there are resources that weren't there like a year or 2 years ago that have greatly expanded.
Yeah.
Certain things, you don't maybe need that context, but when it comes to like, hey, I'm starting a company and I want to get funded, that's kind of different. So in that case, reach out to those organizations, like I said, like She 256, which isn't just about like boosting women, but they broaden their scope
Mhm.
towards more kind of marginalized communities.
Yeah.
So I think there are more resources, but I think honestly, like a bit of it is like Googling around or just like asking questions on Twitter, like in replies to people that have been more involved in those kind of communities. Yeah, it does take a little bit on your part to just like, okay, let's research, let's Google, right? Like,
Yeah.
yeah,
Your own research. That's the name of,
do your own research for everything.
yes, that's crypto. And I think even more, I guess from a philosophical perspective, like that's what kind of this whole turn of,
Yeah.
kind of our world's going, like, be a sovereign or just like, don't just trust what people say or institutions
Yes.
say at face value. Don't trust but verify, which means you don't really trust, but
Yeah. Yeah.
the blockchain system and just like even the way the world is going, inclusion can create more trust within not just technology, but the people that use it because the world's about people. And so, yeah, what's your break into the future? What are you most excited about within this decade? Where do you think mining is going? And just like what
Yeah.
keeps you super pumped about this new world?
I'll start maybe where I think mine is going. I think it's really fascinating because there's so many different revenue models and kind of business models for this industry. So we have like I mentioned, this very centralized, we're just building out a massive data center and mining. So
Yeah.
that's one type of model. But I think there's really cool things happening. For example, where we have industrial synergies. So it's miners co-locating maybe with another manufacturing site, for example, and the heat is getting recycled. So I think, and then that miner is selling heat. It's still energy to another industrial person. And I think my favorite story there is there's a company called Mint Green out of West Coast Canada where they set up in a whiskey distillery, and also and so they're taking the heat and heating the whiskey mash and also the barrels because they need to be kept at a certain temperature. So they're recycling that heat and they're putting it to good use. So it's not wasted resources.
Wow.
They're also boiling the ocean. So taking the heat, boiling the ocean at a sea salt production facility to make like fancy artisanal sea salt. I just like to laugh because it's like, oh, Bitcoin's boiling the ocean. It is, but for a good reason, right? There's applications for for district heating, so heating homes, businesses.
Mhm.
Um, Other really totally different business models are reducing waste. So, like, let's take the carbon story aside and like, greenhouse gas emissions from combustion. Let's take a look at our resources. So there's waste like municipal waste, plastics, biomass, cardboard, maybe that can't be recycled because it was wet and you can't recycle wet paper. Or tires. There's so many landfills that are just tire landfills that just like all over North America. And so there's Bitcoin mining companies that come in and burn. Some of them are looking at more of a burning process, but others, it's called more a thermal deconstruction, where you do it in anaerobic conditions, so no oxygen, and you heat it up, and it creates several byproducts, including char that can be used in other industrial processes. It includes some sort of synthetic gas and oil. And so you can either use these to burn like the synthetic gas, kind of like methane, you can combust it for energy, or you can sell this byproduct that's valuable to other industries to make other products. But when you're using it for heat, like this synthetic gas, you're then powering miners. So you're reducing waste like tires or municipal waste, and you're using the byproducts to mine Bitcoin. So I think that's pretty fascinating because it's sustainable from the perspective of reducing the waste in our landfills and reusing them, maybe recycling. So the tires also have a bit of metal that could be recycled. So I think that's pretty cool and completely different from just like plugging a miner into the grid. So yeah, we are starting to see all these like different kind of things happen. And I know there's a company out of France called, I think it's called Wise Mine, or I can't remember. Sorry. But the point is they are creating a little unit that you attach to your water heater to kind of pre-boil the water so that you from the miner heat.
Mhm.
So, anyone in their residential home could connect a little ASIC and boost, the heat to your, the hot water that you're going to be using for your showers, etc. And so I think there's just like all these like diverse little things happening. Yeah, wise mining. Um, that you can do that's not just like they're just so different. There's so many facets to the industry, so I think I'm excited because we're seeing this expansion to different types. Oh,
Absolutely.
and just generally too, like miners are co-locating with renewables facilities, and they're helping support that industry because if you can provide a predictable source of revenue, as in a miner needs energy 24/7, 365, and so you're constantly buying the power from a renewable energy facility, and then maybe if it's like solar, then during the night you buy from the grid. But the point is, you provide this predictable source so that renewable site says, hey, this is great, I can model this in and maybe build out more facilities.
Yeah.
And because I know that I can sell my power, because in some places where they're transmission constrained, maybe they can't always sell the power because the transmission capacity just will not take that line, or the system can't accept the amount of power because there's not enough demand in that area to take in all the renewable energy that's coming. So I think, we're seeing more and more miners co-locate with renewable energy facilities and support the renewable energy industry. So I think that's why I'm excited. It's like we're helping green the grid by providing,
Our electric,
this.
yeah, our digital
Yeah,
grid. Yeah, it's just like you need to make like the atoms world more efficient, more like carbon emissions. You need to make the digital space more digitally efficient and more energy productive,
yeah,
because so much more of our world is going to be in the digital spaces,
for sure.
even more than the last 20 years. So that's really cool. What last question? Last question. Okay, we talk a lot about the benefits and like amazing things that Bitcoin has already done and can do. Are there any risks to Bitcoin, or what can keep you up at night?
Yeah, I think the regulatory uncertainty is a little bit can be challenging. So, when El Salvador came forward and said, "Hey, we're going to be using Bitcoin with the US dollar." So it's not replacing it. They're just going to use side by side. I think that was kind of like a shot, across the bow that was heard around the world saying, "Hey, whoa, 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 wait a minute. Here's a country that will be accepting Bitcoin as like its official currency. Like this is more serious in some ways."
Yeah.
Countries have been building their own central bank digital currencies, but they like that control, right? They like to be able to control money supply, and because governments have only a few different levers they can pull to push certain policy forward,
Yeah.
and kind of like, manipulate exchange rates and all sorts of things, right? And so the challenge, and to service their debt. And so the challenge is, if people start to shift towards these kind of, the Bitcoin standard, or some other standard,
Mhm.
it gets more difficult for them to control because it's better money, right? Like, I want an asset that doesn't inflate, that, is not controlled by the whims of a particular government that happens to be in place, that, maybe is beneficial to certain people that are closest to the money printer. And so when people make that choice to shift away, it does reduce the kind of policy levers that they have, and in some ways can impact the economy. And so that lack of control is not favorable. So I do sometimes worry about, the bigger this beast gets, the harder it is to stop. And there's a lot of countries out there that, not all of them are going to, say, hey, you know what, that's okay. I'll try the Bitcoin system. But
Yeah.
I do worry about kind of this tumultuous time as governments realize that there could be a threat versus the bigger opportunity to create this whole, economy that you can then export the skills, you can export the technologies to other countries. If you build it, if you build this ecosystem in your country, whether that's around mining, whether that's around, like wallets or the payments infrastructure, that is technology, that is skilled people you can export to other countries and increase your GDP, right? If you're relying on remittances, you then save your country a lot of money in terms of citizens that aren't spending money on remittances.
Yeah.
And so there is an economic well-being for them, and those countries that recognize there are opportunities would win first. But I still think there's going to be this time where countries might, certain ones, like I'm seeing, for example, in the European Union, they're like, oh, we're going to ban proof of work currencies like Bitcoin because they mistakenly think that it's bad for the environment. And the reason, as I mentioned before, there's a certain, mining provides a security to the network that proof of stake systems don't have the same type of security. And so you're giving up certain things for other things. Yes, there's an energy use and we are greening the energy, but that's important because it's a decentralized, money that no one can seize. And I think folks in developing countries understand that. Folks that have 30% inflation every month, they understand the importance of it. And Alex Gladstein from the Human Rights Foundation wrote a number of really cool articles around kind of like check your financial privilege.
Yeah. Fact.
Yeah. So those are a great resource to kind of really understand that, like, we're not all developing world. We're not all in the US using the US dollar global currency. There is certain value. There's so much value for someone who, isn't banked, for someone who is fighting a totalitarian government and organizing protests, that uses this unseizable, money that the government can't cut you off because you're trying to promote human rights.
Yeah.
And there's value in that beyond just, like a payments network or like a store of value. And I think, yeah, it'll be interesting times.
Definitely. That's so awesome. You just like created other questions in my head. But I'm not going to go there. Maybe I will.
Okay, last question.
Okay. um, I have to get this out. Ethereum, Bitcoin versus Ethereum. So Ethereum has been proof of work, but they're moving to ETH 2.0 proof of stake.
Yep.
Just really saying that, hey, me and you could stake our Ethereum tokens and earn interest on those tokens and loan them
Yep.
out to other people, right? Just like a bank, it literally stakes your dollars or whatever currency and it loans it out.
Yep.
Different, but it's kind of the same.
Yeah. A little bit. Yeah.
Fundamentally, it's kind of the same. You are the bank, which is way better. But what is your knowledge? I know you're like the Bitcoin expert and mining expert, but what is like your take on the proof of stake versus proof of work, Bitcoin, Ethereum? Ethereum does have network effects, you could say.
Yeah.
But what would be your quick take on that?
I still kind of stand by the fact that it's in some ways kind of like a less equal system. Ethereum, there was a bit of a pre-mine ahead of time. And I stand by the fact that, like, if I own a lot of Ethereum, I might have the opportunity for, in terms of governance, like affecting the governance of Ethereum in a bigger way than if what am I going to set up a million nodes? Like, it's not the same type of voting where anyone, like, you can buy a computer for $100. Sorry, a Raspberry Pi for like $100, or you can use like an old laptop that you have lying around just to run your node. And you can't do that for Ethereum. You need 32 Ethereum to stake, or pool together with others. But I'm not sure, like how much of your vote actually gets counted in that way. So from a governance story, it's a better system using it on Bitcoin. That said, like I do keep a more open mind. I love to see innovation on various ecosystems. I think it's cool that there's interoperability between Ethereum and Bitcoin and others that are moving along. I think it's like us against the world at this point, where it's this new digital ecosystem that's being built. Whether that includes centralized finance, and you're getting an opportunity to earn, whereas you wouldn't in the traditional system. So I think like as long as we're empowering people, I know there's a lot of like anxiety between the two communities.
Yeah.
I do think, Bitcoin's a better system, but I think as long as we're being more inclusive towards everyone, regardless of, whether you're on this chain or that chain, I think that it's just better for the world. Because I do think a lot of us are just honestly here to build better financial systems.
Yeah.
And yeah, so we're all here because we want a better world.
It's exciting.
We're so tribal though.
We are tribal by nature, right? How do we say we all just want freedom together?
Yeah,
The
yeah,
various forms of freedom.
yeah. And I think Ethereum provides value to Bitcoin in the way that they move fast, they break things, but we watch, and if there's something that is really attractive that was created on Ethereum, eventually it could be brought onto the Bitcoin blockchain. And so it's kind of like a test net in some ways. In that way, it does provide value, but maybe not as sexy for those folks that are like, oh wow, look, NFTs and like in DeFi. But DeFi is coming to Bitcoin. People are starting to work on that, and so I think it's there is value in seeing what we can build in a truly digital space, not connected to kind of this old analog world of legacy, dollars and legacy system.
Yeah.
So in that way, it does provide value. But I think over time too, if you want a company that hangs around, that I put money into, like, let's say it's an NFT, right? I want that to be around, for 30 years, 40 years. But is a company like Top Shot's going to be around? I don't know, right? Like NBA Top Shots working with Dapper Labs.
Yeah.
So I want to make sure that I'm on a blockchain that probably will stand on the test of time, and long term, maybe once the infrastructure is built to accept, to build NFTs on Bitcoin, maybe that's where the world's going. So I think there's like this test net, but things will accrue to the blockchain that is the most secure, that is the most decentralized, so we'll see. Kind of like, it's one of those things where the market will decide.
Yeah. Do you think from that kind of message, do you think there is a possibility and or probability Ethereum can go to zero and not exist? Or is it they're too big, they've established legitimacy? Are they legitimate?
Yeah, it's a tough one. I think it's one of those things where there's a strong community, and communities can make or break things. And if there's enough, like if you reach critical mass and there's enough developers working hard, it's hard. It gets harder and harder to go to, like, will Facebook go to zero? I don't know. Down the road, maybe. Depends on, like, yeah, it's like I can't predict it, right? It's like if it gets big enough and enough resources and smart people are thrown at it, it's hard to say something will go to zero unless, like, so I think it comes down to, similar to banking, how I said, Bitcoin was like 100 or 1,000x improvement. If there is something that comes along that's like 100x improvement over Ethereum, I could see it, slowly shifting away. But until we have something that's like phenomenally better, I don't see it going away. Because there's only a few kind of chains that have the kind of smart talent working on them, and they're not building on Cardano. Like, it's like Ethereum, it's Solana, it's Bitcoin. Those are the kind of ones that people are focused on, because they're better. And there's a lot of ghost chains that like look at EOS. They had like $4 billion they took in, and what do they have to show for it? Not much, right? So just because you have an arsenal of money doesn't always mean that you're going to have that community building on it. And yeah.
That's a whole nother we'd have to have another hour to talk about this part.
Yeah, exactly.
But you're gonna have to come back now. See, this
Sure.
was
Down
awesome.
the road. Awesome. Well, thank you very much for having me on.
Good.
Uh,
Thank you. Thank you. Where can people follow you and stay up to date? And
underscore mags on Twitter.
yeah,
So follow me
that
there.
place.
That's probably the best place to.
Yeah,
Yeah, nobody really uses LinkedIn
yeah,
other than to like,
yeah,
hey, would you like this service?
yeah,
No.
yeah. Yeah, LinkedIn is. I think it's a great tool. I think that. And I say this before. I said this on the episode. Like, then we get.
If you're like enterprise blockchain, sure. If you're a lawyer, sure. But
Yeah,
most people are on crypto Twitter or Bitcoin Twitter.
yeah, yeah. I'm actually on LinkedIn pretty heavy because I find a lot of projects like as well, and like there's a
Yeah,
little space, but for crypto, yeah, it's all on
yeah,
Twitter for sure.
yeah.
Yeah, definitely. So yeah, yeah. But thank you so much for your time, and yeah, let's keep on mining into the future.
Love it. Bye.
Peace. Yo, we had Crypto Mags. She is an OG on the come up quickly in the mining space. We broke down a lot of things, so take it all in. Hope it was awesome. I love feedback. I'll definitely will put her info, her Twitter on the video and also in the link. So I love you guys. Hey, we're breaking into the future, all things future. We'll see you there. I love you guys.